Happy Monday to you. This is Bill Gross, and this is our Los Angeles weekly real estate review. We get together every Monday and review Lloyd Siegel's Monday morning quarterback on real estate articles affecting Los Angeles and talk about them. We broadcast this live on Facebook in our Facebook group. I also put my other social media. So if you're watching this live, feel free to jump in with questions, comments, links, make fun of me, make fun of Lloyd. This is meant to be participative. I'd love to have you participate if possible. If you're after hours as well, leave comments and we will get to you. The basic topic that we talk about every week is Lloyd's Monday morning quarterback, which if you're part of the LA Real Estate Investment Club, you get every Monday morning around, and this one was about 2 o'clock in the afternoon, but actually it actually came out earlier than that. I emailed it to myself to make it easy. It comes every Monday morning, and he goes over essential topics. And as you know, Lloyd runs the LA Real Estate LARIC.com, the LA County Real Estate Investors Association meeting, and we're meeting this Thursday live in Culver City. Love to have you join us for that. So let's get into this. He starts off with a picture of the Cybertruck, which I think is amazing. Where I live, I have a garage that's way in the back of the house we really can't get to, so I can't charge in my garage, and I don't like the idea of charging in the front of my house for security reasons. I'd love to have an electric car, and the Cybertruck I just think is so cool. But he starts off with, I think, as most progressive people do in Los Angeles, they love to make fun of Elon Musk, making fun of Twitter. And we noticed was Twitter's being evicted from an office in Boulder, Colorado. Now, what we really see happening is across the country, office values have come down tremendously as companies have cut down staff, as well as people working more remotely than coming to the office. Companies need less office space. And so what we have here is a kind of a battle between the tenants and the landlords. Smart investors use LLCs and other formats to protect their assets. And so Twitter is one of those where they signed office agreements under the prior ownership, and once Elon Musk bought it, he plays hardball and negotiated better deals in San Francisco and then here in Colorado as well. And so what you have is a news. It's not that Twitter's going broke. The opposite. They're protecting their assets, I think. And while the people who don't like Twitter want to make fun of them, the reality is the laws are written to protect investors for this reason. And so he's not paying, and that's forcing the landlord to consider forgiving rent, lowering the prices, and making concessions. And that's part of real estate. So you always want to make sure if you buy real estate, put it in an entity so that you can use that leverage if you have to protect yourself and or your assets. Second article he talks about is consumer confidence is up. And what that means is 17 months ago, consumer confidence was pretty high and dropped. And what we had for last year was a bit of a correction after all the go-go. If you remember when the pandemic hit, people were very scared, nervous, and then overshot their expectations up. And then about a year ago, things turned a bit, and we've had some price reductions in real estate and some changes in the economy, but that seems to be leveling off. The economy is taking off again. And so one of the key indicators is consumer confidence, which is now at a 17-month high, back to where it was a year and a half ago. So it seems that overall Americans feel like things aren't spinning out of control. I think that was one of the fears. It wasn't that inflation was so bad. It was that it might spin out of control. That doesn't seem to be happening. And overall, more people are making money than not. There are people losing in this economy. Remember, always on these numbers, it's the average of everybody. There's winners and losers, and the winners are outvoting the losers right now in terms of confidence. Next, he has the PCE, which is a read on inflation, and it has the lowest inflation since April 2021. Inflation is down to 4.6%, and it's in the 3 to 4% range, which is higher than the last 10 years, lower than certain periods of history. Certainly, we don't have the same explosion of prices we were seeing a year or two ago. Though I think we all noticed certain prices have increased. There are retailers that struggled and held off increasing prices. I think are increasing prices late because they didn't have the pricing courage that now they are. But overall, the prices are increasing at a more manageable rate overall, and there's less inefficiencies in the economy overall. And so that's led to lower inflation rates. Marcina says, well, thanks, Marcina. Welcome. She's a life insurance agent in Los Angeles. I'd love to meet with you on estate planning with life insurance. I'd love to talk about that, Marcina. Reach out to me. My contact information is below. I'd love to chat with you, maybe set up an interview on my YouTube channel. Or if you ever want to come in live here and you give a quick advertisement for your product or service, I'd love to have you come in and do that. That'd be a lot of fun. So let's get in contact. There's Marcina coming in on our Facebook page. Thank you. Okay, next, S&P CoreLogic, 20 house price index rose in April. Well, I can tell you as a real estate agent who watches prices every day, is that prices had softened and gave back some of the dramatic increase of 2 years ago from like November through about March. So I call that a correction. A piece of that was given back. And now we're back on a 3 to 4% per year annual rate. And that's what CoreLogic is showing us now. It's showing about 0.9% year over year, month over month rate. And it looks like we're going to be in about the 1% to 2% range for this year, but we'll end up at about 3-4% annual rate. So S&P CoreLogic is kind of falling in line with the other indices of where housing values are. Here's a question we hear a lot. Will LA have an office apocalypse? I think the answer is yes. I think office buildings overall are in big trouble. You have a combination of downtown areas like LA deteriorated. You have office workers wanting to work from home. You have companies being able to relocate to cheaper areas. And so overall, and so you see here, Lloyd, who's progressive, has a lot of faith in our government because what they're talking about is reusing office space into housing units. I think we disagree on this. I think most owners of those properties realize that it's too expensive to convert a property from office to residential, unless there's major tax concessions given. But in terms of the actual business, most investors have looked into that and finding it's just not economical. You better have to destroy the building and build a new housing building on the same spot. So I think there's a lot of talk about that, but I think at the end of the day, like a lot of things in Los Angeles, when it comes to housing, there'll be a lot of talk and there'll be very little action. But what we will have is a housing apocalypse. I do think we'll continue to have a strong housing market because we're not building enough housing and we're not building the housing people want. We could build a lot of affordable housing and get homeless people off the street, but we have average people who want to buy a house and they're being kind of pushed into renting high expensive apartments. So I think we'll continue to have a strong housing market, but the office market is in big trouble. And I'd be very careful investing in any office space anywhere in major cities, in particular Los Angeles or San Francisco. And then turning, again, here, this is a story that he got, turning office buildings to apartments will ease California's housing crisis. So I'm going to say, no, it won't. It's never going to happen. It's never going to happen. There's a law that the government would love to have happen. Buffy Wicks out of Oakland, to fast track approval to build 100% affordable on properties like that. The problem is, unless there's some money given to the developer, it doesn't pencil out. Even fast tracking it does not make it economical. Making a non-profitable project available fast doesn't make it profitable, and therefore investors won't do it. Now, will the city step in and buy buildings and do it and lose a lot of tax dollars? I'm sure they will. But this is not true. It will not ease our housing crisis. And there's a big difference between the 80,000 people who live on the streets without any place. Solving that problem is different than our housing crisis, which is affordable housing isn't there for middle-class people who work and want to stay in the neighborhood, raise families. And they end up moving to other states where they can afford to buy a home and send their kids to a school that they feel comfortable with. That's not the case in Los Angeles. And so turning office buildings into affordable housing is not going to solve the housing issues in California. That's a false statement. I'm going to say that, go to limb on that one. Interesting statistic. Park La Brea, it's a huge apartment complex. You've probably driven by and seen the buildings and wonder why they all kind of look the same. It's all one big rental project. And it is, I think it was done by GE Capital originally. The Park La Brea, it's 144 acres, 18 towers, 175 garden-style buildings, over 4,249 units. 4,000 units. And they all got refinanced recently. The largest apartment on the West Coast, and it was done by Prime Residential for $947 million. It's an enormous project. I mean, just wow. It's 95.5% occupied and rent controlled. One of the reasons why this picture makes them look kind of pretty on the outside, they're not so pretty, all of them, because when you have rent control, what happens is you have people live there a long time and pay lower rents, and then the owner can't afford to upgrade the property. And over time, these properties become dilapidated. So the fact this one got refinanced is a real feather in the cap of Park La Brea and the owners and operators, because it's very difficult to do that after so long. That property was built, I want to say, in 1941 through 1950. So that's now 80 years old or more in some places. An amazing project that's still going and as good as it is. 4,000 people live there. Really amazing. Okay, so Lloyd brings an article about you can win an Airbnb stay at some hotel in Seoul, Korea. And Airbnb is doing different things to market themselves, and they're offering a chance to win a trip of a lifetime to Seoul, Korea. That sounds exciting. Here's an interesting story. This is a quirky home that's sold in Alhambra. It got a lot of press. This is the house over the over a bridge, over an aqueduct area in Alhambra. And it's the 1300 block of East Main Street. And it looks over this wash. And it sold, and people were surprised. It sold for it was asking price was $250, and it sold for over the asking price by $180,000. It sold for $430,000. That's not so surprising. Now it is a 1-bedroom, 1-bath fixer, but I don't know of any houses that sell for less. There are lots that sell for that for $300,000-$400,000 in that area. So the fact it's a fixer, but it's a house. I don't know what the exact status was of it. But what a unique property. You can imagine really make it something special, perhaps. Very, very unique property, kind of unusual, got a lot of press. Then also, here's another story. You're going to see, I think, a lot of politics about driverless cars. Some residents, now it says, the article he put was, driverless cars are driving San Francisco residents crazy. There are a few people that's driving them crazy. The statistics show that driverless cars are safer than cars are driven. It's just that when a driverless car has an accident, it gets a lot of attention. And it's one of those things where there's going to be a political battle in San Francisco. Everything's political. And so you have citizens. And I also think politicians love fights, because when there's two sides fighting, they get one side to pay the money to enact the law they want. So we're going to see a lot of political hand-wringing over driverless cars in cities. You'll see less of it outside of cities, and they'll be adopted. We'll see if it takes off. It's kind of like when Uber started, it wasn't allowed in certain cities, and then it got so popular outside of those areas, like outside of LAX. It got so popular that eventually the politicians had to make some accommodation to it, that they've restricted here at LAX and other airport areas. But this is another case where we're going to have a political fight over driverless cars. What do you think? Do you like the idea of driverless cars? Personally, I have an older car. I park on my own. I've seen people use the electronics to park a car for them, but I'm old school. I grew up driving stick shift. So for me, parallel parking isn't a big deal, as it is for some young people today. But what do you see as we grow there? Okay, quick advertisement. We'll wrap up with an advertisement. This coming Thursday, Rick Sharga is going to talk about investing in this uncertain market. That will be at our monthly event, which is always the second Thursday, this coming Thursday, the 13th, at 6:30 at the Iman Center, which is on Motor Avenue. It's just south of 10 Freeway in the Culver City area. And it's free. The event's free. Parking's free. I'll be there as the official podcaster. I'm free. But if you're there, I'd love to see you. We'll have 250 people there, as well as about 50 vendors. So you'll see a bunch of vendors, and then you'll see a group of people there. And then also coming up is Lloyd's Foreclosure Forum on Saturday, August 5th, where he goes deep onto different foreclosures. Distressed properties are a great opportunity for investors to find. And so he'll go through that in detail. If you sign now, it's only $149 until July 29th, and after that's $249. Still a great bargain for an all-day event on foreclosures from a master on the subject. So we do our podcast tomorrow at 3 p.m. the Real Estate Investing Zoom podcast. If you're with Larry, you get an email invite for that, but put it in your calendar every Tuesday at 3 p.m. Love to have you join us. Okay, that's our content. I don't see any other questions in our chat box. You're welcome to put questions in there. If you put them there afterwards, we will circle back to them as well. Hope to see you Thursday, July 13th at 6:30 at the Iman Center. Come up and say hi. Come up to Lloyd and say hi. Tell him you disagree with his perspective. You like my perspective on his article. Otherwise, make it a great week. Thank you so much. Bye-bye.